Okay. So I'm going to do a quick TA video on Clover Health, right? I've been working pretty hard on some of these indicators, trying to get like precision, right? As well as a little bit of odds are in your favor, if not, you know. Um, okay. Um, well, I want to look at this one first. This one's a little bit on the plain side. I kind of shrank some indicators down that way to be more visible like this. Uh, so this dotted line right here, this is like the institutional bicycle, the the turbulence or the volatility, right? The downward movement. Now, one of the biggest ones we've seen was 60 cents level. Then we've seen another one um, kick off. I would say these two are more important than these two because when it has the orange in the blue, it makes it more valuable. So we've seen one here at around 260, then another one here around $2.19, say probably 215. But now we got one coming up, right? So we get this trend follower right here, future cast kind of directional. We get cycle analysis the way I set it up. This is how I see it. I've been using these as the points, and then we're gonna have one in the center right here. So it's gonna be the minor cycle within the dominant cycle. Um, see here. So according to this, like if you do cycle analysis and you're trying to come to an end of a trough, and you know, it's more like this $1.85 zone, uh, maybe to 160 is a it's a really good buy zone because it's pretty much what this fighting happened here. You can see, right? there was a lot of action going on there. Shorts got pounded on, and then they had to reset their location, and then they decided to reset it right here. Uh, but I don't see it going any lower than $1.60. Maybe $1.50. Yeah. So to the extreme, you could say 120. To the absolute extreme. Now, like I said, I don't see it passing 160 or 150, but my expectations are around 185, give or take a few cents for margin of error. So I see it going two ways. I see it having a little bit of a relief bounce right here because we're kind of overextended, right? Um, and then finding resistance right here where this gap is at, and then coming back down. Probably more on this side. And since it's going to have a lower, and this is the way I'm looking at it, right? I believe it's going to have a lower start, right? So this is going to be a right-handed translation, this minor cycle. This one right here is actually, if it ends at 185, it's going to be a left-handed translation within the dominant cycle itself, depending on how it ends. Um, but we'll find support if it does go up and it doesn't make it down. And this was the bottom. I'm not calling it the bottom. I'm saying it has a probability of being the bottom. And that's the reason why I'm making this video today. The possibility of it being a bottom or becoming a bottom soon is increasing dramatically. Um, so it could hit to on top of this. Consider this zone right here as support. Bounce off of that and go to the moon. Having a right-handed translation, right, with a good earnings report, right, it would definitely be a catalyst, right. But we just use a technical analysis. We're not going to be adding the catalyst because we don't really know if it's going to be a good catalyst or bad catalyst, right? And even if it is a good catalyst, look at the odds of the stock drops every time we have an earnings report. How many times has it, failed? More times than it hasn't, right? Um, this time could be different, though. It could be different. Now, once we start rallying on bad news, now that's going to be the kicker. You know how the market is, right? The overall market. Once it starts rallying on bad news, it's pretty much coming to a bottom. Um, and then once it starts going down on good news, then it's creating a top. When it's at the high, the absolute high, and whatnot. But the market, is designed to go up. I mean, it's designed. You look at the S&P 500, right? You got the top companies, right? They get rid of the weak ones and they add the stronger ones, so it's constantly on an upward momentum. And then you got inflation and shit like that. Like, who wants to keep their money in the bank, right? Better to have assets or something that continues to outperform inflation. Um, and that's the reason why the market is cyclical, and that's the reason why you have cycle analysis. That's the reason why you have rotations. That's the reason why the market will always go up. That's the reason why this shit is rigged. That's the reason why you can time the market. That's no, I don't know if you can time the market, but you can damn sure try. Um, yeah, like with psychoanalysis shit. But there's no guarantee. I mean, you can have the odds of like 90%, and then that 10% could fuck you over, right? Um, so I'm considering this zone right here. That's going to be the middle of March to the end, the beginning of April. A zone. All right. Um, and then that's the level I'm looking at with the time duration from here. If it continues to follow this trend, which I highly doubt it, I mean, I would have to get price action would smack me in the face if it followed this direction. Okay, so I'm not gonna go there, but it's there. So let's go to a more higher performed chart. A higher grade, higher tier. You know, um, so let me see if I can explain some of this. Okay, so like this area right here, this gray area, which means it's consolidating. Now it consolidated and broke down to the downside, right? Um, but if you kind of like set them up together, you could see how the indicator created a huge divergence, right? From like here to there, right? And then here to there, you know. So strength was falling, but prices were going up. So like that's a no brainer, right? Uh, Now this could be one. It could be, but it would cannot go any lower than what it has already done. And it's a barely it's a baby one, but you could say here it's already divergence, just like this is already divergence. See the red line, right? This red line here is a divergence, but you use this indicator right here, right? And price action, and you can say, well, it was right there, and it went down there, right? So there's a slight curvature to it, right? And you can say here, and if ooh, so it would be something like that, right? So there would be a slight divergence there, and that in itself could be a signal, just like how it was from here to here, right? It could be a signal. You know? Good to have a lot of you know, a lot of information, a lot of data. Try to filter through it. All right. So as you can see here, like this is over, like an oversold scenario. This dark red, right? It's an overflow of money leaving the board. This is an overflow of money entering or buying, right? Distribution, accumulation, right? And then you have it here. You have a distribution overload there, overload there, overload here. We're currently in an overload area, right? And then you can also see it with some of these other indicators, right? Like this bars that are going up, right? So I got the candlesticks on volume candlesticks. So they combine volume and candlesticks together. So that is the volume, is the candlesticks. Uh, so you can tell, right, the size they are. You know, that's going to be the volume, and then this indicator right here also displays it because it's calculated by the candlesticks. So you can see this like wide spread here. You know? Like this blue went from here to here, and that whole area from start to finish, right, was nothing but downward side momentum. So that's there. But the idea is to get all of them to line up. You want, like I named my indicator, or no, I named this template itself, right? This structured technical analysis with yeah. Well, let me skip that. Okay, so okay. Um. So yeah, I call this template planetary alignment because that's what it is, right? It's like when everything gets together and they're all speaking the same language and they filter each other out, right? So this is my planetary alignment template, and I still got room for a little bit more indicators, right? But yeah, yeah, it's good. It's real good. Um, Limit breaker. Okay. Um, let's see. Yeah, yeah, it gets that way too. Fought through the terror, boy. Um, okay, so the orange and the blue are significant. The green and the red are significant in a way, but they're not as significant as the orange and the blue. Um, and then once you get like all of them starting to like say the same thing, right? Like when you got the monthly cycle in a going into an overbought scenario with the weekly cycle in an overbought scenario with the the 1 day cycle, the 3 day cycle, all going up. You got this print here in the red in the background with green spiking higher than it has happened on the chart, right? Uh, with the orange, like I said, that's very important. Um, and then you got this red X here, which means there's overexhaustion and it's getting weaker now. That you can tell by the candlestick itself as well. And then if you look real closely, I gotta kind of zoom in here. You got these arrows, right? And typically the darker arrows are just like standby and then the confirmation. But by the time you get confirmation, it's already too late. You want to get it while it's in the standby phase, right? So like if you get this overbought scenario right here with this overbought scenario with this red print, right? With the green bars completely dropping to nothing, right? Like there was no continuation in the momentum. You call this momentum, histogram or something. So it dropped right there. So you got this, yellow X beforehand, right then and there. That would have been the perfect time, according to this setup, to think about locking in some profits. This one right here, if you didn't do it on that one, then this one right here would have been better because it has the signal in the background, and then there's really nothing going on here. It's in a downward. It's all the short term time frames are going down. The long term we're still really holding on or you know. Uh, then they continue to hold on until around right here, and the weekly drops off. And then you can look at the background over here. There's some more action going on. Like this over bot zone. Overflux of capital coming in, like this one was coming going out, right? Um, so yeah, on the bottom of 60 cents, if I had my charts or this one in particular, I would have known that this is the perfect time to buy, right? So we look back, really, the other time was here and here, and they're so close to that. Hell, this one was practically the same price. It's like 70 cents, right? Then we hit down to like 60 cents, so it's like 10 cents less. But then you had these buying signals going off, right? You had this one right here, this blue line, matched in with the red, the green, right? It's in a bottoming phase. It's oversold here, oversold on the short term time frames, oversold on the long term time frames, right? You know, you have these arrows right here, which indicate that momentum is slowing down. You didn't have any momentum really on the downside over here. You started actually having positive momentum, right? So you get add in all of these conditions and have your due diligence to figure out if it's a good buying opportunity or not. So that was the past, right? We talked about that one. We talked about this one. We've seen that one. We could see this one. See these little dots right here? This is the whale buy or sell indicator. You got one right here too. And these little lines, this is fair value gaps, right? This is another reason why I stated 180 could be a good area to look for a bottom, right? It's because there's a fair value gap right here, a really big one, and it's really close to a support zone right here. And the support zone in the middle of it's around $1.70. And then if you go to the bottom of this, it's around $2. So anywhere between there, here to here, try to slice it down the middle. You probably would say like it just barely touches it. Just it fills that gap, comes down and almost wants to touch it, right? About 180, and then it goes, mwah, and then it bounces, boom, right? So that's kind of the eye. That's how I got the idea, right? It's pure TA. Um, anyways, so yeah, this is the whale indicator here, here. And you have one got set off there, there. You got the arrows. You have the cycle going oversold on the short term. The One of the long term cycles were going into oversold, but the monthly cycle stayed positive. So the overall regime was a positive regime right here, right? Um, and then you had like this buying, and you can see this little dotted line here and here. That's basically like my overbought, oversold condition with the blue line right here, and then this orange line right here. Um, that's kind of like the institutional buy and sell. I inverted it and had the opposite scenario happen here. With the calculation, it's not like a mirror inverted. I do have one of those though. Let's see, somewhere around here. But yeah, so you got the positive cash flow here, right? It's an overbought scenario with another overbought scenario with the regime going downwards with another overbought scenario. You started losing. You had all these whale sell signals pop up. You had losing momentum signals popping up, you know, and then you have this huge fucking divergence, right? From here to there, right? Like you had it from here to there. So you had that, and you had a losing, and then a lost. And then you had the lower time frames move down with the dominant time frame, with the regime time frame, which caused this whole breakdown right here, right? So yeah, you had a couple of selling opportunities, a couple of buying opportunities right there. Uh, there was a whale buy area here, right here. You can see also the circles. Kind of like an oversold zone with the overall regime was in the negative zone. Then it had a bounce, and it looks like it's going to be a dead cat bounce on the regime. I do have something from Chat GPT. I kind of like program Chat GPT to semi understand what's going on in my charts, so I'm going to play that too. Um, all right, so right here, this is it's kind of like a volume profile, but it's a pivot profile, right? So each one of those mean a pivot to the positive side and to the negative side. So every time I pivoted, right, price pivoted, it counts some and then it determines, if it's when it pivots up like it did right here, it's supposed to two. A couple days ago now, it's a three. So it pivoted off of this zone three times, this zone positive two times, negative once, 13 here, two there, so on and so on and so on and so on. Right? And then you have these support and resistance zones, right? This is the strongest one. This is a 57% at damn near $4. It's like $3.80 something cents. Um, but you can see how it's starting to dissipate here and then go into a positive case scenario. And then you got, like I said, the most important ones are going to be the orange ones and the blue ones, right? And then secondary, the runner up, is going to be the blue and the red. But here and here, here. So if you would have bought 3 times, you would have bought that one, and that one. Where we're currently at right now, that would put you somewhere probably around right there, right underneath that fair value, those two fair value gaps, right underneath that. So your average would probably be around $2.35, give or take. All right. Future cast says that we're pretty much going to stay on the downside after a bounce. We're going to bounce up somewhere. We might make it to the bottom of this. Let's see here. The bottom of this fair value gap to the negative side at like $2.35 or something, and then come back down and do like I was pointing out over here on this chart. Do something like this. And if not, then we're automatically roll over and then go into that area. Um, but it looks like the daily is pointing up now. Um, the monthly is still in a downward scenario. The weekly is going down, and the 3 days going down. So it looks bad, right? It looks like this area right here is going to hold as I don't know. I want to say that I'm going to give the benefit of the doubt that we could break through this resistance and make it to around this area right here, which is below the fair value gap, and then do that. I want to give the benefit of that because we were so oversold um, that we need a relief rally, right? We need some type of move up, and it's going to have to be bigger than what we have here, in my opinion. So I'm more suggesting that something like this is going to happen in the short term. I'm not sure if it's exactly going to be that way. Probably not. But, it's going to be something like that. We're going to get some kind of relief rally, then we're going to come back down, test some support lines, and see what happens. See what the earnings report is. See how the market reacts to the earnings. If it's good and they act negative to it, then that kind of sucks. If it's good and they act good to it, then thank God they finally first time ever, right? Um, but if it's bad and they act good to it, oh, that's it. That's it, guys. That's the bottom, baby. That's the bottom. All right, all right. So yeah, I'm not calling this a bottom. I'm still got my eye on that 180, give or take a few cents for margin of error. But um, but it looks promising. I mean, if we could hold, if we could bust out, come around here, especially break these two um, fair value gaps, fill that shit, and then hold a higher high, right? Around, I don't know, according to my my analysis, I would say it would look more positive looking at it right now, because as time goes on, it's kind of like, forecasting anything, like forecasting the weather. The closer you get to the day, the more accurate it's going to be. But when you're trying to forecast something out like, weeks in advance, probably won't be the same when it's days in advance instead of weeks. Um, so yeah, there's a good possibility, I believe, but I'm not calling it. Anyway, let's see what Chat GPT had to say when I asked it.
Good question. This is the right place to ask it because now we can answer it from duration evidence, not vibes. I'll give you a range, not a date. Dates are how people get humiliated. First, anchor the durations you're actually seeing. From your screenshots, roughly 8-hour cycle, 10 to 20 trading days per full oscillation. 3-day cycle, 6 to 10 weeks per full swing. Weekly cycle, 4 to 7 months per regime leg. Monthly cycle, 18 to 36 months per major phase. Right now, based on where all four are sitting, monthly, rolling, not bottomed, weekly, still declining, not flat, 3-day, attempting a base, 8-hour, relief bounce only. That tells us where we are in the clock, not just the price. What regime change actually means here. A real regime change by your own framework requires at minimum weekly stops making lower lows and flattens, 3-day expands upward and sustains, monthly stops declining. It does not need to reverse yet. So the gating factor is weekly, not 8H or 3D. Now, based on historical cycle duration, when the weekly is in a declining phase like this, historically it takes 1.5 to 3 full 3-day cycles, or 8 to 14 weeks to transition from decline, neutral, early expansion. And that assumes no macro shock, no earnings bomb, no liquidity event. So the realistic estimate from now, given the current positioning, earliest possible regime shift, 6 to 8 weeks. This would require a strong 3-day expansion that forces the weekly to flatten early. More probable window, 10 to 14 weeks. This aligns with a full weekly cycle completion and monthly stabilization. Later, slower scenario, 3 to 5 months. If the weekly continues drifting lower or chops before basing, what will happen before regime change? Important so you don't misread the tape. Before a real regime change, you will almost certainly see multiple convincing 8H rallies that fail. At least one, this looks like the bottom moment. 3-day false starts that roll over. Weekly that looks flat, then dips again. That is normal. That is not failure. That is basing behavior. The tell that regime change is actually underway. You'll know it's real when 3-day expands upward and stays elevated. Weekly stops responding negatively to bad news. 8H pullbacks stop reaching oversold. Monthly slope flattens visibly, not reverses. That sequence takes time. There is no shortcut. Plain English answer. If someone put a gun to my head and forced a range, you are likely 1 to 3 months away from a genuine regime change, with 2 to 3 months being the highest probability window. Anything sooner is a bounce pretending to be important. And the key takeaway, so you don't sabotage yourself, right now is positioning and patience time, not call the bottom time. Your system isn't late, it's early enough to protect you from lying to yourself.
Yep, pretty much. Um, so that's what ChatGPT had to say about it. I'm thinking. I thought that there was going to be a bottom forming around by the end of February, but it looks like we could probably see it by I don't know, probably by the end of March. Actually, beginning of April. I don't know, somewhere between there now. That's if you know catalysts like earnings report and stuff like that, like news and micro stuff, um, play a part, and then it changes the name of the game. And you can see these indicators; they'll start changing quick with it. They're basically saying the bottom is in, the bottom is in, right? And it's like saying, "I'll be surprised if it ain't $5 by the end of last year." I will cut my life into pieces. This is my last resort. Suffocation, no man, don't give a fuck. All right, being a little bit goofy there, but Bookmap is a different scenario. Bookmap says something unique too, and I don't have Bookmap up right now. Then, what was I gonna say? Yeah, you know, fundamental analysis, being really good at it is great. But I think, you know, if you got somebody that is your strongest technical analysis guy in the group, the last thing you want to do is get ban them or get rid of them, you know, because now somebody else is going to have the ability to be one step ahead of the game. Because I could just stop making videos like this, I could continue to improve, and I have fundamental analysis tools because I bought them, and just like I bought these tools, and then just like I created some of them, right? So in the end, it's a growing experience, and there is no right way to make money in the stock market. There's 100 ways to lose it, though. A million ways, a trillion ways to lose it. The infinity. Googleplex. Googleplex times Googleplex. All right. Anyways, yeah. So that's what I'm calling out. ChatGPT said, what it said about weeks, a lot of weeks, into like what was it, 2 months. It's basically calling it 2 months. So if we're in the middle of February, it's basically saying by sometime in April it should be, and I'm calling out. I'm calling out from what I'm looking at right now, regardless of price, just time. Um, the end of March, the beginning of April. That's what I'm calling out. So, and I'm still waiting on that bottom. It could be before the cycle ends. It could be after the cycle ends. It could be the end of this cycle or beginning of this one. I got a little window margin of error, right? And this is another conclusion. Like this indicator's only spiked up past overbought, right? Which is basically, what it's calculating here. Here, here, and now here, right? This is his third time doing it, you know? And it's done it at the absolute bottom before. So if you could, if you want to do the math, right, you can say, well, these are buying zones. And let's say, well, investors that bought in at 60 cents and that are currently buying in at these zones, right? Then we can say the peak of it's going to be right there. Try to find the middle, and that's zone one, right? And you could say, well, over here there was a lot of buying going on there. There was somewhat buying going on there, so you could try to get somewhere in the middle of that when it went into overbought, um, right there. So that's zone two, right? And then you come over here, you look at this one, because these right here are, it's kind of important, right? But it's not that important. So it passed over right there. Looks like it did it again. So you come over here, you're going to say, well, looks like you do it right there. All right, so never mind about that. Um, Let me get my calculator out because I'm old school like that. I got to use my calculator. All right. 0.65 plus is that 0.8? Is that $1.85? And plus the $2.75, right? Yeah, equals. We're going to divide that by three. So three of them. So it's around $1.74 is where if you would have bought in at these three zones, right? Then your average, an institutional average, should be give or take a few cents from $1.75, give or take a few cents for margin of error. So that's the reason why it's having a lot of trouble getting down past $2. And you damn sure they're going to continue buying as it falls. All right. Well, that was food for thought. And I'll see you guys on the next one. Peace out. Oh, yeah, it's over here. Wrong one.